All right, testing the audio. Can you hear me? Okay, cool. So the sound's good. Okay, so it's gonna be pretty chill. We're just gonna go over kind of some easy ways to catch some trades, some macro, some market structure, things like that. Let me know if the audio gets bad. I can switch to another mic. Uh, so let's start with larger time frames here. All right, so we would start with EMAs. Let's start with EMAs. So I think I shared this in the Discord a couple of days ago, but we recently had a bullish cross retest. So uh, the way that I trade EMAs at least is looking for EMA crosses, and then the first time that the price goes under that cross level is generally a good buy. So like here we're looking at the 1 hour, and we had a bullish EMA cross here. So we had the 50 cross the 200 here, and then after it did, the price just ran away from us, right? So pretty parabolic uptrend. And then we had this test here, and we came back here. We didn't quite go underneath it. And then the real buy here was right here, whenever we really tested underneath those EMAs. And this works with MAs, EMAs on every time frame. So like one of the layouts that I'm going to go over later goes into this in a little more detail. But as you see, like after we get that bullish cross and then we get that retest where the price goes underneath, that was an amazing time to buy, right? Like I longed here, but after we retested that, it was pretty much just up only. So if you're trying to get on trend, just understanding that can help a lot. So like if we go on our bigger time frames here, so here's an example on the weekly, right? So we get the 60 crossing the, I believe this is the 60 and the, let's see, what do I have on here? The 60 and the 30, right? So we have the 60 crossing the 30 here, and then if you'll notice, price ran away. No, price ran away until we came back down here on this dip here. Dipped underneath both of them. Best time to buy, straight up, right? So just understanding these EMA retests is definitely going to be applicable on pretty much all time frames. So if we go on like a smaller time frame here, let's turn everything else off. So we look on like our 15 minute. So you'll notice like you get across here, right? The 60 crossing the 30 here. Price runs away, comes back, soft tests it here, then falls underneath them again. Both of these times, like the trend is continuing because you're getting breaks of structure here, getting higher highs. So you're continuing to buy underneath these, and this applies to the 200 too. So you kind of double confluence when we got down here. But you'll notice like when these EMAs cross and then the price comes under it again, as long as you're with trend, it's generally going to be a really good entry price into that current trend. So I just wanted to quickly go over that. We'll go into that a little bit more later. But yeah, so that's EMA crosses. You can back test it with EMAs. EMAs, it's great for finding entries into the current trend. So let's go macro here. So what has price done here? So let's go to total. So if we look at our total chart here, this gives us a little bit of a cleaner picture. So total, we did get our range, initiation, mitigation, continuation. So like we got our weekly market structure flip. Internally, we got the flip here, and then the next week we got the external flip here. And then what happened, this is called a decision block. It's the last block of demand before we break structure. So what happened on total is the price broke structure on the weekly, came up, put in a lower high, broke structure to the downside, came back to test the decision block where we spent the most time right before the breakout, bounced off the decision block, and is now coming back up. And it looks like, funnily enough, if we're looking at total here, we're rejecting right from our weekly order block on total 3 here. So we may get a little bit of a retest similarly of this area. Well, it looks like it's kind of already been mitigated, but I would say you're probably more likely to test this. You're more likely to test this order block demand here. But likely we're going to bounce off this supply block up here and come back down and find support somewhere around this 3 million mark. It happens to be a flat, or 3 trillion, happens to be a flat number too. It also happens to be like right at the range that we were in previously before the big drop. So even though we didn't really get a mitigation on Bitcoin USD, like it didn't come all the way back down to mitigate this range. If we look at total, we did get a really nice block, bounce from this decision block here. We got an SFP on the weekly. We got a break of structure on the weekly. And so let's talk a little bit about structure. So the way I read structure, at least, is I keep it simple. So you want, for something to be a valid high, there has to be 2 candles pushing in the same direction. And then for something to be a valid low, there has to be 2 consecutive candles pushing in the same direction. So like this would be considered a valid high on the weekly. And then this would be considered a valid low because we have 2 candles consecutively pushing in the same direction. So on the weekly, we bullishly SFP'd the lows here. We bounced from the decision block, and then we came back up, and we bullishly broke structure to the upside. So this is when, at least in FG's Discord, this is when I became extremely bullish right here. Because if you go back in time on Bitcoin, every time that we break structure on the weekly, we at least sweep the high. So, of course, that doesn't mean that it's going to happen this time. It would just be the first time that Bitcoin did break structure on the weekly and didn't go test the week high, right? And this high is weak still because we failed to break this low, right? So once we break internal structure to the downside here, right? The job of this low here, or this leg here, is to break this strong low. That's basically, you can look at it like it's been hired to break this low. So when it fails to break this low and then break structure to the upside, this high remains weak. So this is your weak high. Weak high, right? And then this remains strong. This is your strong low. So you're targeting the highs. So that's why we flipped bullish really hard here after the weekly break of structure. Pretty much no resistance up until we hit the weekly supply, which we would expect to get some sort of reaction off of, especially because it did cause a weekly bearish break of structure. So that's the macro there. And it looks the same on like total 3, right? Total 3, it looks really nice because this weekly did break to the upside barely, right? And then came back down to retest the trend line and the golden pocket. And then just recently bullishly broke weekly structure to the upside, put in a nice little decision block demand order block here. So I would assume that we're probably coming back down to test this, and that, you know, if you put an alert here and you buy some smelly altcoins when it gets down to this level, you're probably gonna be just fine. As long as we don't lose this trend line, right, or lose these lows, then your weekly structure is intact. You're looking for break of structure to the upside, mitigation. So this is your range, right? This is your initiation. This will be your mitigation, and then continuation, right? So looking for, so it's range, initiation, mitigation, continuation. This is RIMC, right? So that's what we're kind of looking for on total 3, or at least what I'm looking for. Of course, if this fails to hold, then we can talk about, you know, bearish scenarios. But right now, this just looks to be completing its RIMC, right? So I don't have any real problems with this. We also didn't come up and test this wick either, which I mean, it's also right at $1 trillion. I would expect us to get back up there at least. So that's kind of the macro of looking at things. So that's why I remain bullish, even though, you know, Bitcoin's correcting here. I'm still holding along from 101,800. I probably should have taken profit at 107, but I wasn't looking at the charts. But let's see. So let's talk about trading the range. So one of the most profitable trades that we called it twice was this 101,317 level, or like 101,340. And like, why is this level important? This level is important because we came up here and we formed like this chong, right, with five highs, right? And we put in this low here and we put in this high. So then what we can do is we can pull like a fib with our range high at 100%, or this is upside down, but yeah, it's like plus 25%, 125%, and minus 25%. So when we were coming down, let's see, this chart's not. Okay, so yeah, so this is, yeah, 101,367 here. So when we were coming down, I told you guys to watch out for the 1 hour to hold this level. The reason that that's important is because this is our range, and if we're going to get a deeper correction, it was going to happen after we lose 101,367. Because as long as, like, when we came down, these 1 hour candles hold this deviation level 25%, it's just a range deviation. And what did we do? We then rotated up and pulled the range, right? Now, interestingly, if you look, we just did it again, right? So when we came up here, we have the same range from before. We rejected and closed the hour underneath the plus 25% mark here, which means that technically speaking, this is just a range deviation to the upside. So what happens then? Well, then we pull the lows, right? So we wreck everybody who's like, hey, we're breaking out, we're going to the moon, right? It'd be different if we closed a 1 hour candle above this deviation, but right now, over the past, what is this, like 10 days, all Bitcoin's been doing is ranging. It's just staying within the standard deviations of the range. Looks to be SFPing the lows, kind of retesting demand down here. It's rejected from premium up here. That's why I said we were probably going to pull these lows or these highs, because this is where the range turned to premium. People shorted it back down to the range low. We bounced up, likely place to go, take out everybody's stop losses who shorted up here. So yeah, so that's why we took this long here. That's why whenever we came down here, I was looking for this level to hold, and I was looking for us to sweep everybody who got in on the higher low here, has a stop loss below here, and then take the highs of the range, which is exactly what we did. So that's range deviations, right? So I wouldn't say that. Well, we have a likelihood, more likelihood of going to the upside just because of structure right now. But like we look at the 6 hour here. So when we came down to this range deviation on the 6 hour, we also put in a 6 hour SFP of our previous lows, right? Because we have two down candles here, makes this our important low, and we actually SFP'd it multiple times, right? And whenever we came up here to put in this deviation, we did break structure to the upside. So even though this like I see your comment, Bitcoin's getting like rocked right now, but it's holding internal and external structure, right? So this would still be your external structure low on the 6 hour, and then this would be your internal structure low right here. So we would look for like a bullish SFP of that, or we'd look for it to just hold. But yeah, structurally, there's nothing wrong with Bitcoin right now. Like it's had a massive bearish engulfing candle because it had a range deviation, but it's still just ranging within the same range that we've been in. Like nothing has changed. And yeah, like I said, look for an SFP here. I think we just got one on the 50. Yeah, let's look at volume. Yeah, so this is another thing to go over. This is SFP volume, right? So whenever you get an SFP, like a significant one, you want to see this. Like you want to see sellers came in to try to break structure to the downside, right? Because here's your external 15-minute low, right? Because you break your structure here, break structure here, and a fake SFP. So now this low was attacked, right? And what's happening? Bears attacked the low, and then bulls immediately came in and defended it hard, right? Like that's a lot of volume. It's definitely a lot of volume. So that's what we want to see. I'm like looking for an SFP. Also, there's probably divergences here. So if it closes back within the range, then there's just like a hidden bull div, but you're also losing money flow. You're losing the 20 line. It definitely looks sketchy, but yeah, I don't have any problems with this right now. I don't see any reasons why this couldn't come back up at least to retest this order block here. Because it's unmitigated. So yeah, so look for that SFP low to hold, and then we should be able to come up a little bit. So let's go over how to trade extremes. So one setup that I really like, especially during the New York session, is going to be, I like to use the Bollinger Bands on the 1 hour, change it to EMAs, use the 20 EMA, and then I like to use the 50 EMA on the 1 hour as well. And what this does is it makes it easy to get on trend, right? So whenever we make this parabolic move up, you pull the EMAs to cross here, and you get your 20 above your 50. And then what do we look for? We look for price to come underneath both of them, right? And that first retest, you buy that. Boom, right? You're on trend. You target the highs, stop below the Bollinger Bands, and that gives you, let's see, would have been like a 2-to-1 trade. But I mean, you could have rode that up higher. But the basic point is when a lower time frame EMA crosses a longer EMA, you wanna look for a retest underneath. And like wicking outside the Bollinger Bands like this, and obviously this is a 5-minute, right? But you have bullish divergence here. A lot of it, right? Usually returns to where the divergence started. So, you know, like right here. So you get the SFP at the lows, stop everybody out. Do we SFP on the, let's see. Yeah, we're getting, yeah, we got hidden divergence there as well. But yeah, so that's how you use EMAs to find entries as well. And let's see, what else do I want to talk about? Well, does anyone have any questions about any of this? Okay, take that as a no. So let's find a fresh chart here. And let's look at our 1 hour. Okay, so I like this SFP, but I would like to see it on the 1 hour because I don't like volume as much on the 1 hour. If this does break, I would expect us. Oh, we didn't test this. Yeah, if this does break, I would expect us to come at least down to here. So this is 1 hour demand, and we could do uh, something like pull these lows. Like an SFP into this demand, closing back above, I would like, because this is internal. I believe it was 6 hours structure. No. Hey. Yeah. So this is internal 6 hour low. So if we could pull this SFP it, I would like that. Yeah, Nick, I do. So like I was saying, the fact that we were rejected from a range deviation and closed back below it means like the same logic that said when we deviate the range down here, if we hold that level, we're expecting to pull the highs, is the same logic that we sweep here, we're expecting to pull the lows. Uh, yeah, I think we definitely could come test that May would be well, but we'd want to see the bottom of this channel hold so we could try to regain it. Um, yeah, we definitely don't want to lose. Again, my validation for longs would be if we close a 1 hour candle below 101.340, because until then all we're doing is ranging. So we wreck the highs, wreck the lows, wreck the highs, wreck the lows, and we're just looking for that to stop and for it to choose a direction. But I would say I don't like how total looks. I don't like where we rejected from on total. Oh, that's a lower high on total too. Yeah, I don't like that at all. So total didn't even make a higher high when Bitcoin just did, which means dominance is probably ripping. Dominance flips back bullish. Retests, decision demands. And we're going up. Yeah, so dominance looks good. Looks like, yeah, we'd want to see total break higher. Yeah, I still think we're just ranging. And we'd want to see these lows hold on total on the 6 hour. So I would set an alert here. You don't want to close any 6 hour candles below here, because then you lose your 6 hour uptrend on total. And yeah, you're probably coming back to retest 3 trillion. Yeah, alts are just getting wrecked. 30-minute. Yeah, 30 minutes trying to hold this SFP. Yeah, I think the close of this 1 hour will like if this 1 hour low gets pulled and closes below, we're probably taking the lows again with that May VWAP. But I like where the May VWAP's at for like an invalidation level because it's kind of right at previous low sweep here. We'd still again want to see this 101.320 hold if we do sweep it. And yeah, nothing extremely bearish yet unless we break 6 hour trend on total. It's just we're just in the range. But altcoins are getting murdered. Let's look at our daily. Okay, so this is significant. So let's look at this. So we have some daily structure in here. So we set a daily low, and then we broke structure to the upside. No, we didn't. It's not 2 candles. Actually, yeah, this low is not significant. There's no high yet. Let's see. Yeah, never mind. We probably have 12-hour structure though. Yeah, we do. Okay, so we set a 12-hour low here. We bullishly broke to the upside. So we'd want to see this low hold. And then we're just looking. Yeah, we do look at that. So this is a golden pocket retest, the 12-hour trend. So yeah, innocent until proven guilty, golden pocket retest. Look for an SFP on the 1 hour out of the golden pocket. Yeah, this doesn't look bad. Just looks like a giant megaphone. Yeah, so you can even see on the 12-hour, like the price gets above, pulls these up to cross, price gets below them, buy it, and then it goes up. And now we're testing the lows again. Underneath all of the EMAs here. Yeah, sure. Yeah, let's look at Heigenassi candles. So one strategy that I like to use during New York, so let's find New York here. Okay, so like one strategy I like to use a lot. So when we were trading on Friday, so how did we catch this low? So we used 5 minute Heikin-Ashi to get this low, right? So um, we set, there's no lows, no significant lows in here. There's just one candle, but we did set a significant low here. And then after that, we SFP'd it, and then we just kept SFPing, or we broke structure here bearishly, came up, broke structure bullishly, came down, SFP'd the low, pulled the low underneath the EMAs, and then whenever you see like so generally going into New York, I like to use MACD and Heikin-Ashi candles. You'll see like this build up here, but it'll be divergent. But you'll generally get like 4 hits, 4 lows, right? So you break structure, so you get 1, 2, 3, 4 lows, right? So it's like your Chong pattern down, and then you go up. So you'll get that MACD cross. You'll go up. Whenever you come down and you see the MACD on the 5 minute flip with a green Heikin-Ashi candle, this is extremely profitable, targeting the week high on the during New York session. And the same applies if it's flipped, if we're seeing breaks of structure, like if we're correcting and it's upside down, and so like the EMAs are across this way and we're going down, like as soon as you get that bearish flip on the 5 minute MACD, right, you can short that down to the next low, right? As soon as you get that bearish flip here, right, you can short that down. As soon as you get the bearish flip, right, short that down. As soon as you get the bearish flip, short that down. Now, once you change character here, you stop shorting. You're not going to short anymore because your external 5 minute structure has flipped to bullish. So now you're looking for it to come down, form that bullish divergence, and then you just do the opposite. Especially when the MACD line is like underneath the 0 line, and then you see that divergence. Even had like a nice 5 minute Heikin-Ashi SFP here, and then you see the MACD flip, you buy that candle, and up you go. Because I think yeah, it's even SFP'd on regular candles here. So that's generally how I'll use the 5 minute. Is I've found that your external 5 minute structure is going to give you direction on your higher time frames. Like it's going to bleed into your higher time frames. The best thing that you want to see is yeah, I did it here. So this pattern, right? So you want to see SFP the lows, and then pull the highs, then flip structure to the highs, or the same thing upside down. Like so, whenever you see an external 5 minute SFP followed by a break of structure, it's extremely profitable in that direction. Like I think the back test, it was like it's like 82 to 89% success rate in changing the 15-minute trend. So I like Heikin-Ashi candles just because, and I can upload the back-to-back photos, but you can see like you get cleaner SFPs. It avoids traps. Like when regular candles will break structure, a lot of times the Heikin-Ashis won't close higher. So like for example, okay, I like that. So we did break 1 hour structure, Heikin-Ashi structure here. but like 2 hour we SFP'd here, even though we broke. So regular candles, so Heiken Ashley candles gave you the clue here, right, on the 2 hour, because we broke regular candle structure, but that was like a fast move, and the average volume was, or the average price was actually way down here. It was like 105. But so that was an artificial spike up. So once we SFP this here, we target those previous lows, which we just swept. So that's kind of how I use, because since there were 2 candles here, this is a valid low. So when we SFP the high, we look to target the previous low. But that's kind of an example of like, you'll be able to see through manipulation, because even though, you know, they pushed the price at the end of this 2 hour candle and got it to close above, the average price is way down here. So you're already suspect of this close. And the next one closes below 2, and you're like, okay, we're going to target the lows. And we came down to test this breaker block here. Oh, did we get the SFP? 90 minute? No, we didn't. Oh, we did. Okay. Okay, so this is good. So we retested the golden pocket, and we got a 30-minute SFP. I would expect this to come up. Yeah, I like this. I don't think that's bearish. Looks like we got this artificial volume pump up here. Couldn't break the range deviation. Came back to target the strong lows. Confirm them as strong, the SFP here. The only thing that would change my opinion on that is if the 1 hour didn't SFP, but I think it's probably going to, because, okay, the volume looks better now. Like on the 1 hour, this is solid SFP volume here. Sellers came in, bulls bought them back up into the range. Yeah. So that's like a live example right there, right? So what happens, 12-hour structure breaks, you pull your golden pocket, you bounce from the golden pocket, you get an SFP confirmation. And then this is just a really cheap trade, right? So you can even like draw your golden pocket from the bottom to from the wick to the bottom of that candle, get your 0.5, take the trade, stop below the low, targeting the highs that are still weak. Like, look at, yeah, like, look at that. This is a 11 to 1 trade. Super cheap trade. You get your confirmation SFP volume here. Yeah, I like it. So that's why SFPs are good, because you have a clear target, previous highs, some range weak, you have a clear invalidation. You'd really want to see a close below, because like a lot of times you'll get double or triple SFPs and you get wicked out. So you want to wait for a close, but as long as this remains valid, it's 11 to 1 trade. So. Any other questions about any of that? Okay, cool. So in summary, and I'll probably break these down into individual videos later. I just wanted to, I know that I'm probably talking fast. There's a lot to go over. But like the main things to remember from this is a high is valid, or a high or low is valid if it's 2 consecutive candles in the same direction. Oh, order blocks. Yes, we'll go over order blocks. 2 is REMC, right? Or precision demand. So you'll want to see price will form a range. Pull the lows, pull the highs, whatever. Initiate out of that range, mitigate that demand, and then continuation. You want to get in on the mitigation, right? Or you can get in on the break, but you want to get in on one of these two spots. And then hike in, actually MACD plus 5-minute structure. New York. EMA crosses. All right, and last thing let's talk about order blocks. So what order blocks do I care about? So I only care about order blocks that are, so you want to see like a bearish candle. Here's a good example here. Like you want to see a bearish candle that's totally engulfed by a bullish candle and only interacts with one other candle, right? And then breaks something, right? So once, and I'm not sure if I turn on smart money here, it'll, it has that as already being mitigated by the wick. But yeah, so the only order blocks I care about would be like this and this one, because you want to see, one, it has to break something. So did this break something? Yeah, it came up and it broke the previous 15-minute structure, so I care about this order block. Did it only interact with one other candle? Yes. So when we come down into here, we get this huge wick, but now we're getting a reaction out of that area. Because this is where they previously, this is where institutional money at least previously purchased and then caused to move up from. So there's still a lot of resting orders in this area that they want to come back to. There's a lot of stop losses and resting orders in there. So that's what you want to look for in order blocks. Right, so if you don't have these three characteristics, if it's not one candle that's engulfed by the next one, it only interacts with one other candle, and it broke structure, then you don't care about it. Yeah, Joey, thanks. I'm trying to keep it short so y'all can rewatch it. But yeah, that's how I use structure. So understanding range deviations, like what we got earlier, understanding when price is trending and when price is ranging, and then just studying these 6 things here, which I'll post in the Discord. Okay, so I'm gonna make individual videos about all this stuff, but is there any questions about any last questions about anything that I went over right now? Okay, awesome, guys. Well, thanks for stopping by, and it should be recorded, and I'm gonna make more videos and streams and stuff. And yeah, we'll see what happens here.